All right. Hey, everyone. So this is a slightly different version of What Are They Up To? There's a lot of things going on. We have earnings. We have different types of IPOs that fit right within our innovation blocks. I am here with Chris Fuentes, one of our analysts. He is going to help me look at and discuss some of the interesting topics that we're seeing. So as a disclaimer, this is not a recommendation to purchase or sell any securities mentioned. And this is for educational purposes only. Reach out to Houston Hess, our head of operations and compliance, if you have any further questions. So some of the topics we did want to cover today are around some of the big tech earnings that came out. So think Apple, Facebook, Google, Amazon, Microsoft. There's a lot of interesting themes within that. We also have some noise or interesting IPOs that have come out that again, fit within our innovation blocks. One being commerce evolution, the other one really being around financial evolution. So we'll talk on Poshmark, ThreadUp, MyTheresa, which recently went public, Capri and Tapestry also reported earnings. And then lastly, again, we'll talk about financial revolution, which really involves PayPal. Square has yet to report, and then also maybe some color around our thoughts on how Robinhood fits within this whole concept. Now, I wanted to welcome Chris. So Chris, how you doing?
Pretty good, Sean. How about you?
Good. So busy week for sure. What I wanted to do, let's kick it off with the big tech. So at a high level, I think there was three clear takeaways. You have simply the sheer scale and size of these platforms. So when you take Apple, Amazon, Google, Microsoft, you combine that, you have roughly $300 billion of annualized net income, which is the equivalent of essentially the S&P 500. So sheer size and scale of these platforms and still growing robustly. The second one is cloud and some of the implications of what we saw within Microsoft, Google, and Amazon's cloud businesses, and then also commerce. A lot going on there. I wanted to start with commerce and maybe get some of your insights and thoughts around the trends taking place there.
Yeah, for sure. I mean, I think you said it right. So two takeaways was just not only the sheer scale of these companies, but also how quickly they continue to grow despite their size. So, right off the bat, right, we had Amazon this week, which provided a really interesting earnings report. And so clearly, it's addressing several end markets there in terms of cloud and commerce. But just on the commerce front, very, very interesting. It's scraping almost $500 billion if you think about gross merchandise volume, and that's growing incredibly quickly. And so one stat that they put out, which was actually quite fascinating, was the square footage in the logistics system grew by 50%. So not only, like you said, are they incredibly massive, but they continue to grow at an incredibly fast pace. And so clearly that was one company. And then you also have other players like Facebook, which is starting to move into the commerce space today. And you're also seeing that kind of at an inflection point with things like Instagram shops, et cetera, growing at about, the other revenue category, right, was a triple digit plus 156% year-on-year growth rate. So again, these are businesses that are already at scale, but continue to execute really well and continue to grow pretty quickly.
Yeah, no, definitely. I think when you take that logistics part of the equation and the sheer size of Amazon logistics, you can really think years out and the implications of that. I think it really comes down to speed of delivery and the type of delivery that they can handle. Obviously, we have companies that we track, follow, or invest in that are either sit on top or on the side of what Amazon is building. And some of the challenges has been timing of delivery, but also, again, size of packages. So as they continue to build this out, you can think about the future of commerce through those lens and how much commodity goods or just goods in general can flow through this platform. We saw them announce the pharmacy business last month. And again, this has to do with their capabilities of logistics. You can't do this without the proper logistical infrastructure. And so again, if you take those two things, just the sheer size and square footage that is being built out and the purpose of that build out, you can start to think about all the other types of products that can flow through their platform. And yeah, I agree. The Instagram, as everyone probably knows, anyone that follows us on Twitter or anything out there, We've been big proponents of Instagram and its capabilities there. We think that Instagram is essentially the digital mall in a sense, but with 100x more traffic in terms of digital traffic than a traditional mall, which is relying on foot traffic. And this month we'll have a couple guests, whether it's Placer AI or some others from interesting companies that are tracking foot traffic. So make sure to subscribe, and you'll be able to see those in the future. But I do think it's very, very interesting at what's happening at big tech outside of just sheer tech. Now, the next topic really is around cloud of these businesses. And when you start to look at the stats, it's really the big three, right? It's AWS, Microsoft Azure, and Google Cloud. Just some rough numbers here is AWS is growing at roughly 28% year over year. This is a run rate business of roughly $51 billion. So this is kind of the second order effect of what Amazon built. We all know Amazon as a cloud company, as a commerce company. The fact that Andy Jassy is now stepping in as the CEO says a lot about their interest and continued development within cloud. Now, Microsoft Azure is the number two. It's about half the size, a little more than half the size, growing at roughly twice the speed. And now there's reasons for why companies are choosing either or, and I'll maybe elaborate on that. And then the third is really Google Cloud. And Google Cloud's a $15 billion run rate business, growing at around 47%. Now, GCP, which is their cloud platform, which is really the comparable to AWS, is growing at what they say meaningfully above their overall cloud. So again, when you think of Google's cloud business, it incorporates G Suite and incorporates Gmail and kind of all those tools. Azure incorporates some of their Office or their application solutions. AWS doesn't have the applications in the same way. So it's not really apples to apples, but what the clearest takeaway is that these companies are growing and growing fast, and they're growing off a large dollar base. So yeah, that's my general thoughts there is how fast these things are growing. Another thing to think about is AWS and even Google and Microsoft all announced within their earnings reports was topics around the on-premise world. So AWS within their release highlighted AWS Outpost and their different form factors, which is the 1U and 2U servers. Again, I think that's important when we step back and think about the future of computing, which again is one of our innovation blocks, where it's really around this hybrid and multi-cloud environment. Google has Google Anthos. They're not building that by accident. That's really a multi-cloud offering. You have Azure with Azure Stack and some of their other offerings as well, which again is all about on-premise and cloud business. And then you have AWS acknowledging the on-prem business and actually building a solution for that. So I think it's important to remember that we think the future of computing is everywhere, similar to what we saw in brick and mortar retail, where it's all about omni-channel. It's all about choice. And we're seeing that within the cloud businesses today. I don't know if you had any additional kind of comments around cloud that maybe you wanted to share, or we can just move on.
Yeah, no, I think that was really well said. And I think, again, right, the big three, the whole notion just being more spend shifting onto the cloud. And typically that was just a pure off-premise thesis. And now what you're seeing, yes, is like this combination of everything in between as well. So hybrid infrastructure and multi-cloud infrastructure. And so, like you said, these companies are releasing new features, new products, new capabilities for their end customers. And at the end of the day, right, AWS was leading the race, and now what we're seeing is kind of Microsoft's Azure, GCP kind of closing that product/feature/capability gap. And of course, they're growing at off of much smaller bases relative to AWS, but they're continuing to grow quickly, and clearly the opportunity remains pretty large. And I think it looks like that into the near future. So.
Sure. Yeah. Another thing to highlight quickly is why people are choosing one over the other. And from everyone we speak with, it's really AWS has been the developer's platform from day one, where you start launch and you basically have a massive offering of services and tools at your arsenal. Azure is really about tapping into their enterprise relationships and those that are already using kind of the product suite of Microsoft. So it's a really easy, not easy sell, but it's something that there's already brand and trust and loyalty within those systems, and ease of use in terms of deployment. And then third is Google, where why do people choose Google? It's mostly around their ML and AI capabilities. And that's why people are choosing multi-cloud, so they can run different types of applications or analyze their data in different stacks. So that's a really important thing to consider when we think about how and the shape of what the future of this competitive environment could look like. Yeah, I think that's a pretty good kind of rundown of what's happening in commerce and cloud at the high level. Now, we didn't touch about Apple, because Apple's kind of in its own realm. And Apple, at least for me, it's there's different stats, and I'll let you maybe share some. But for me, it's really about the future of Apple, where outside of earnings is just simply the concept of them either partnering or joining with a car manufacturer, whether it's Hyundai or some of the whispers out there. And what we know about the car market is it's a massive market. It's one of the biggest end markets out there in general, transportation and kind of car sales. On top of that, what do we know? We know that their success within the Apple Watch, the AirPods, the iPhone, obviously still being the bellwether of the business, is that they're highly attached to our physical bodies in what we would consider the future of health, where to be the future of health, we think the leaders there are going to be connected devices. So when you think of health, which again is one of the largest end markets as well, the future of Apple in terms of successful from an investment point of view is really their success in those two larger end markets, which really allows them to pivot and take what they've built in kind of technology and go beyond that. Outside of that, like, what was some takeaways from you from the report?
Yeah, no, I mean, I think first of all, right, great quarter, but then also just at a very high level, right, just the install base. I think that's been kind of like a developing story over the past, I mean, ever since the company really started to pick up the pace, and it's just reiterated today, right? So their install base just being whatever it is, I think 1.6 billion devices out there, and still quickly. So like you said, right, so they have all these different end markets and clearly very large end markets, and they spoke a little bit about that. I think that was one of the questions in the call. And the whole concept about, like, how do they go about, attacking those end markets? And at the end of the day, basically just leveraging where they are today in terms of the massive scale globally, right? It's not just a domestic story. So thinking about global install base, and then thinking about the trajectories and in other countries as well, which seems to be really, really positive for them. So just being able to leverage that, plus off of that install base, you have other things, right? Like the App Store, which basically just enables all these connected devices to interact with software. So yeah, I mean, I think, clearly they're in a really strong position, and there's a lot of different ways this can go, and they're just going to be leveraging kind of that infrastructure layer position that they currently sit at to drive all that innovation.
Yeah, no, definitely. All right, next up is commerce evolution. So we saw Poshmark file and then go public. We had a kind of data of the week that we put out on Fridays that had a couple stats that were interesting and also highlight our interest there. ThreadUp just filed an IPO, or is filing an IPO, similar concept in kind of this circular economy concept. And then MyTheresa filed an IPO, and that's all about bringing luxury to digital. I think it was a spin out of Neiman Marcus. Here's a company that was brick and mortar for its whole life until maybe like 7-10 years ago, where they embraced kind of a digital first motion. And that allowed them to expand to a pretty successful business and really create and tackle the commerce side of it through simply technology. We're creating experiences and networks within it. On top of that, I'll highlight some stuff from Capri's earnings and Tapestry. I think that's more around that brands are still relevant. And how do we think about that? There's some obviously recordings of us talking about Capri in the past, But I think, again, highlighting was probably the hardest time for somebody that was selling in a brick and mortar environment that I could imagine. And both of these companies are exiting, and you can't even say exiting, right? Because COVID is still here today, but exiting 2020 with less debt, producing a ton of cash, higher margins, higher price average unit per, or not device, but per unit that they sell, revenue per unit. And when you step back and think about that, it's really kind of how does that happen? And we think, again, brands do resonate, they do matter, distribution channels do matter. But thoughts on Poshmark, ThreadUp, the circular economy? You have had some good data there. What's your general thoughts?
Yeah, so I mean, I think just off of the general trend in online commerce, the whole story has just been about removing friction on the buyer side and on the seller side. So you want to make sure that products have some sort of transparency, validity for buyers, and so Amazon has clearly done that with the review and the rating system. And so what we're seeing today, is these companies basically just doing the same thing. And like you said, these companies are really, really ingrained in what we call the circular economy. So when you think about that, thinking through the resale of clothing, et cetera, secondhand goods. And so, again, seeing these companies do that. So specifically, we saw eBay launch a lot of different seller tools to enable them to, be able to better offer some sort of validity / transparency to buyers. And this is, a certified refurbished program and things like that. And then similar with Poshmark, ThreadUp, just trying to remove the friction in getting people to sell their clothing through these platforms. I think Poshmark was pretty fascinating because it took this social media approach to the commerce problem, and I think we'll see if how that works out. But I think it's an interesting angle, and I think honestly it just goes to show how powerful the companies that own the eyeballs, i.e. Facebook, Google, are, and how difficult it is to reinvent a social platform from the ground up. But on the commerce front, they continue to do. To continue to do really well. So I mean, I think all these companies are just continuing to remove friction. I think that's the underlying trend. As they continue to do that, you're going to have more GMV flowing in, and as you have more GMV flowing in, they can reinvest that to continue to remove more friction. It's just this virtuous cycle. And I guess another side of the story would be so just kind of a more specialized / verticalization of certain online retailers. So if you think about eBay early days or Craigslist or something like that, you're getting secondhand goods, but it's kind of a whole bundled solution that you go into eBay or Craigslist for. And now you're seeing companies Poshmark servicing specifically apparel. So you can't really buy a lot of stuff outside of apparel on Poshmark. And then the same thing on ThreadUp and MyTheresa, it's kind of doing it in a different way. So not necessarily by product type, but more so just the type of buyer that's going there. So the high value customers that are kind of buying everyday luxury. So just much more specialized niche marketplaces doing it really in a much better way than a total broad kind of bundled marketplace can do it in. And I think that'll continue, but that doesn't mean that the companies like eBay are done. They're also continuing to react and innovate quickly. So
yeah, no, definitely. I think that's a good point with the Poshmark and time spent. I mean, I think in the filing, the active user on average spent roughly 27 minutes a day on the product, so that speaks to just simply engagement, and that engagement drives potentially conversion on the platform. And like you said, it's all about removing friction. I mean, if you think of what Poshmark is as a business, it's really something, and again, we're not investors in Poshmark, so just throw that out there. We're just fascinated with the concepts and kind of the opportunity as well. But look, they have a 20% take rate. They take 20% of each transaction. And it's really the value that they're creating on the transaction side or removing that friction, where before it was about cleaning your closet and you had a closet of goods, and the way to sell that had a lot of friction prior to someone like a Poshmark. And they made that experience pretty easy. I mean, the seller essentially gets a box or a prepackaged label that they can stick on a box that is paid by the buyer, that allows this transaction that they can go to the post office and essentially drop it and move on with their day. And again, it sounds simple, but in scale, this is ultimately what they created. And that they're being rewarded with a 20% take rate on items above $15. But also the interest in that, as I think one stat that they also threw out there is, of all the buyers who activated between kind of 2012 and I think it was like 2018, 34% of the buyers then activated as sellers by the end of the year in 2019. So it's not only just buying and selling, but it's actually creating this flywheel that once a buyer or a seller realizes that they can buy or sell, they actually join this type of circular rotating network of buying and selling on the platform. And maybe not for the good of actually making money, but just for the purpose of finding value. And as they reduce and create more convenience, I think it's just a powerful force that's out there. Now, the next one I wanted to talk about, go ahead.
I said I agree. I think that was well said.
Nice. Yeah. So Capri. So if you think about what's happening there, right? This was a big margin story quarter for them. It was also a big validation of what they've built on the e-commerce side, right? Luxury or mid-luxury is traditionally not it's definitely a touch and feel part of commerce. Now, you still had to have the engines in place to embrace this. So I'd say Capri or Michael Kors, for example, was one of the first, if not the first, through our analysis of somebody in kind of the mid-luxury to luxury space that actually had a dedicated app for the brand. If you go out there, it's mostly third-party channels, right? It's the Macy's and Nordstrom's, and those typically have created the apps. And they built an application, the Kors VIP app. Actually, over the last 3 months, it was the strongest 3-month downloads over the last 3 months on record for that app. And that the quantity of that was roughly half of something like Lululemon. So we're seeing some digital traction. Again, this was done before COVID, and this allowed them to see 65% e-commerce growth, 70% on Michael Kors. Versace saw over 100% e-commerce growth. So again, the engines there were put in place prior. And again, this speaks to the execution of the management team, but it also speaks to brand. And brand mattered more than ever during COVID, because when you think of purchase intent during a time like COVID, you weren't trying to take a risk, right? You were trying to buy things and brand in online matters more than ever. Because you've already built this trust layer between the consumer and your brand. And what does that mean? We saw Tapestry, which owns Coach, Kate Spade, Stuart Weitzman. They reported today on February 4th, and they saw 69% gross margins. Michael Kors, Capri saw 66% gross margins. When you put that in the context of all the investment universe, I mean, this is up there with, for example, this is higher than Twilio, right? And we think of Twilio as like this lean kind of little asset light model. But again, it just shows that brand can create margin can create a flywheel where people embrace what it's doing. On top of that, last note is simply that in probably the hardest year ever, they're cash flow positive. If you just think about that, and paid down a meaningful amount of debt. So bigger, leaner, faster, stronger than they were pre-COVID. And I think that just speaks to, we talk about the marketplace models where it's more commodity business with scale and logistics really, really matter, and timing of that model really matter. And then you look at something like the direct-to-consumer model, where brand is hard to replicate, but if you get it right, it's really rewarding on the margin side. So I don't know what else you got to share for that.
Yeah, no, I think you said it well. Historically, I think commoditized marketplaces, brand has been a little bit less of a factor there, and we're actually now seeing companies start building brands through commoditized marketplaces via things like rating and review systems. Which is interesting because they're using that brand as like a powerful engine to move off of the commoditized marketplace and decommoditize themselves, if you will. And so, yeah, I mean, I think in the direct consumer world, right, brand is going to be clearly really, really important. And through COVID, clearly the companies like Capri that have owned these powerful luxury icons have performed really well. So.
Cool. Yeah, let's skip to final topic is really just around financial revolution. And for us, that ultimately means is simply all the different concepts that are around the financial system that we think are structurally being changed. Whether that is the shift to cashless, whether that is unbundling of banking institutions, whether that's creating liquidity within real estate market. One company that reported yesterday was obviously PayPal, and some of the numbers were pretty profound. We saw an addition of 73 million users throughout 2020. If you put that in context, they had 300 or so million users when the year started, and they expect roughly 50 million users next year or this year. So quite large numbers when you think of the sheer size of PayPal. They've been a key beneficiary. While we look at someone like the cloud businesses, they didn't really see an acceleration in their business, but we're seeing the continued mind share shift to cloud. When it comes to someone like PayPal, there were a clear winner as it accelerated digital payment adoption. Now, some other anecdotes within there is Venmo's total payment volume grew 60%, $47 billion. I think we're talking about a $200 billion roughly annualized run rate growing at 60%. Quite astounding. And we haven't got Square yet. Square obviously has done really, really well, both from fundamentally and also the sheer valuation of the business. But that's kind of our general thoughts on something like a PayPal. On top of that, it's really the concept of what's happening at someone like a Robinhood, where you have a clear innovator reducing friction on the onboarding, but at the same time, it's just another use case, whether it's historically being Facebook or some other organizations where you push really fast and then all of a sudden you run into some sort of issue. That again, it may be that tail risk that no one's really expecting. But it is that risk that is there. And it's just the realization that companies can move really, really fast to take advantage of an opportunity to remove this friction and be kind of that leader in the space. But the speed and lack of, let's say, risk analysis of your tails could come at the success of the business longer term. Now, there's a question whether this is a good thing or bad thing. We saw app downloads soar for Robinhood despite this. So someone out there, right? Any news is good news type of deal. I think they're going to be running Super Bowl ad campaigns now. They raised $3 billion kind of overnight. Some of that is for emergency purposes, clearly, and some of that can potentially be used for growth initiatives to take advantage of the spotlight. I don't know. What's your thoughts on PayPal? Thoughts on Robinhood, and anything you got there?
Yeah. So PayPal, right? I mean, I think we're excited to see Square down the road, but clearly, just thinking just in terms of consumer merchants continuing to add value there. In that ecosystem, and that's kind of evident in the numbers, right? So if you think about product market fit, like you said, Venmo GPV kind of growing, or TPV growing 60% year over year, billions of dollars, and just continuing to grow really, really quickly. And clearly the story, I think, is far from over there. We think about all the other consumer options today and all the value that these companies are creating. And one thing I always like to say is that it's very much a dynamic landscape. And so, the PayPal of today, the Venmo of today, and maybe the Cash App of today as well, isn't going to be the Cash App of 5 years from now. And I think we're starting to see that as they move quicker. You see things like Cash App Borrow on the Square side, but then PayPal as well, launching a lot of value-added services in both the consumer and the merchant side. And so very much developing landscape, and it makes it a little bit more difficult if not a lot more difficult for the incumbents to compete there. And then on Robinhood, like you said, yeah, the past year has seen kind of like breakneck downloads. So I think the numbers were like 14 times whatever Schwab saw. And then other like smaller ones like Webull was actually doing fairly well as well, since they only got 3x Webull. And so, yeah, I mean, just thinking through like all these innovators in the space, removing friction in the onboarding process, right? Democratizing finance, I think is like their slogan. And so clearly it makes a lot of sense to move quickly, but then like you said, there's always the risk at the tail end, and nobody really knows what that means or what that entails until what happens. And so, we have yet to see kind of how that's going to play out, but yeah.
Nice. Yeah. So I think we'll wrap there. I think there was a lot that we covered. Some things that we own, some things that we don't. Again, this was not a recommendation for purchase or selling any of these securities. But with that, I think that is really it for this version of What Are They Up To? Make sure to subscribe. We have more stuff coming out in terms of content. Our goal is always to share some of our insights and research out there, and doing so in different types of formats. So make sure to subscribe and have a good weekend. We appreciate it.